30 minutes until the start of trading. This is the first full trading week of the new year. I'm Matt Miller.
I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, a seismic shift. President Trump vows to run Venezuela for now as he rewrites a new world order.
And as that situation plays out, Trump sparks new questions about who and what's next.
Meanwhile, here in the U.S., key data will also shape the week ahead, including manufacturing figures next hour and the Friday jobs reports. But nothing really matters beyond the Venezuela situation. Am I wrong?
You are not wrong at all. Although if you were to look at oil markets, overall equity markets, they don't care. Here's maybe where okay, stick with me here, because oil is barely moving. But here is what in the equity market is moving, which is maybe why you have some of your skepticism in that statement, because Chevron, seen as one of the biggest beneficiaries, up 6.4%, Exxon 3%, Conoco Phillips up 5.5%. They will likely be the beneficiaries if Trump takes control of Venezuelan oil. But the question also has to be asked, if we get even more of a surplus of oil, is that really good for these companies?
Right. Well, you know what? Damian Sassower, who's going to join us in a moment from Bloomberg Intelligence, has some very important multi-billion-dollar points to make regarding these oil producers. What is the same as it ever was is the AI trade. These stocks continue to climb in 2026 as they climbed in 2025 and 2024. Bullishness on Wall Street shows no signs of abating. Nvidia up by more than 1.5% today. Intel, this is a fascinating company that we're going to talk about with Peter Tchir. It falls but leads the charge on his ProSec thesis, and Palantir as well. These stocks are gaining a lot of ground in the pre-market. Dani?
Matt, back to the top story of the year, and I can say that not only because it's a big story, but it is only January 5th. This weekend, President Trump demonstrated just how far the U.S. is willing to go to eliminate a leader seen as a threat to American interests and security.
The future will be determined by the ability to protect commerce and territory and resources that are core to national security. These are core to our national security. These are the iron laws that have always determined global power.
Joining us here from Washington, D.C. is Bloomberg's Washington correspondent Tyler Kendall. She's at the White House, and interesting that he talks about national security, probably less the cocaine threat and more the oil and energy dominance, right?
Yeah. Hey, Matt. Good morning. It is clear that the U.S.'s vested economic interest in Venezuela's oil production is top of the list for this administration when it comes to what happens next in Venezuela. In fact, our analysts at Bloomberg Economics say while there is a lot of uncertainty on what that outlook looks like, right now they are downplaying the risk that Venezuela is going to devolve into chaos, but they are upplaying the risk that there's going to be a delayed transition to democracy because this White House has yet to outline some of those key specifics, like when they're expecting an election to take place. And that's because President Trump himself told reporters last night on Air Force One that he needs to see Venezuela's economy come back, in particular with this emphasis on Venezuelan oil production. So it's going to be something to watch closely in the days ahead, as a senior U.S. official does confirm that a coalition will engage diplomatically with those remaining in Venezuela's government in the coming days. But Matt and Dani, at this point, the U.S. has put forward those more immediate priorities that we're going to see a focus on. One, of course, that oil production, but also we've heard the Secretary of State say that they are closely watching that potential curb in illicit narcotics coming into the United States, and then also that Venezuela cuts ties with some key U.S. adversaries, including Iran and Cuba.
Tyler, thank you very much for that. That's Bloomberg's Tyler Kendall reporting live from the White House. Now, Maduro faces U.S. drug trafficking charges later today. Bloomberg's Miles Miller joins us live outside of the Southern District of New York Court in Lower Manhattan. Miles, what's next?
Yeah, Nicolas Maduro and his wife, Celia Flores, are in federal court here in Lower Manhattan. They'll go before a judge at 12 this afternoon. They are facing 4 criminal counts. The lead charge is a narco-terrorism conspiracy, and they lay this case out in very stark terms. They allege that they intended to benefit from a designated foreign terrorist organization. And prosecutors say that for a span of about 25 years, that Maduro and his wife did everything to facilitate moving drugs and drug money into and out of Venezuela. Among the serious charges, that they were able to get diplomatic passports for these drug runners and for these money launderers so that they could get in and out of Venezuela and go to places like Mexico to move those drug proceeds. These are very serious charges. They're talking about protecting roughly 500 tons of cocaine through Honduras over 8 years. And it's very stark and in contrast when you look at the former president of Honduras being pardoned by President Trump. He actually was in the same facility, MDC, where Maduro spent the weekend. And this is a very stark case when you look at what happened in that case, that president being charged and tried and convicted by the U.S. government and then pardoned by Trump. And you have Maduro here facing very serious charges, which could see him be in prison for the rest of his life. In prison, likely the same facility where El Chapo, the former head of the Sinaloa cartel, is currently.
All right, Miles, thanks very much for that reporting. Miles Miller outside of the SDNY, the very same court that convicted Juan Orlando Hernandez of directly facilitating the importation of hundreds of tons of cocaine. But President Trump pardoned him, showing that this is really a lot more about oil. We're looking at oil stocks up as President Trump pledges to revive the Venezuelan energy sector and also help those companies get some money back. Let's get right now to Alex Longley. He covers oil for us at Bloomberg out of London. And Alex, it's interesting. A lot of people have pointed out that we haven't seen much movement in the contracts in Brent, in WTI today. But maybe that's just as telling as if we had seen a 5% jump.
Yeah, exactly. It's the new norm for a big geopolitical day. And I think it tells you something about the scale of the decline in the Venezuelan oil industry over the last few years. More than a decade ago, this was a country that produced about 3 million barrels a day. Today, it produces a third of that. Neighboring Guyana didn't produce anything about 5 years ago, and now it produces about 1 million barrels a day, the same as Venezuela. And that tells you also something about why the market's not reacting. It's because there's been a host of other producers who have lifted output in recent months and years, and that simply means that Venezuela's sway over the global oil market isn't as big as it was. The question now that traders are asking is how long will it take to reverse the fortunes of the industry there? And I think the early signs are you might get a sort of a quick return of a few 100,000, maybe 200,000 barrels a day or so this year if you get a lifting of sanctions in the coming weeks. But a meaningful overhaul of the Venezuelan oil industry is something that's going to take tens of billions of dollars and many, many years before we see Venezuela coming back to being a kind of the powerhouse it was, say, 2 decades ago.
It's going to take time. Alex, thank you so much. Bloomberg's Alex Longley. Joining us now is Damian Sosauer. He will be joining us in a moment alongside Peter Tchir to get more on what's happening in both credit and bonds and the oil market. Let's get a check on futures first, Matt, because we are seeing a rally. But it's not really about Venezuela, is it? Yes, some of the energy stocks are doing well. Oil stocks and oil companies are doing well. But it's AI. You point out this at the start. The NASDAQ 100 is up 0.8%. Yeah,
it's really the AI stocks pushing us higher. We do have some defense stocks rising in the pre-market. Obviously, the oil majors as well. But this isn't the FTSE. We're talking about the S&P here, so they don't have as much sway. When we come back, we are going to talk to a man who's been covering Venezuela since Maduro came into power, as well as Peter Tchir. So Damian Sosauer will join us from Bloomberg Intelligence. Peter Tchir is going to join us from Academy. We're going to roundtable it with them. A lot going on here, including billions of dollars, potentially of repayment. Then we have really the most important oil analyst in the world, Ed Morse, joining us from Hartree Partners coming up this hour. We have Wilbur Ross coming up this hour. We have Hans Humes from Greylock Capital, who cut his teeth on this kind of distressed debt, as well as our own Eric Schatzker, who sat down with Maduro in Caracas just a few years ago. So there's a lot going on around this, clearly the most important story of the year thus far.
Yeah, hey, but we're also going to talk AI, in case you forgot that was going on, which you'd be forgiven for this morning. Citi's Stuart Kaiser and will join us along with the economic outlook from Katrina Dudley. We will get ISM data coming up in the next hour. Stay with us for a packed show. You're watching Bloomberg TV.
China expresses grave concern of the U.S. seizing Nicolas Maduro and his wife and taking them out of the country. The U.S. move is in clear violation of international law and the principles of the UN Charter. China calls the U.S. to ensure personal safety of President Nicolas Maduro and his wife, release them, stop toppling the government of Venezuela, and resolve issues through dialogue and negotiations.
That was China's Ministry of Foreign Affairs spokesman through a translator. The U.S. operation in Venezuela could serve, though, as a template for nation building for them as well. Former director of the Defense Intelligence Agency, General Robert Ashley, says China's Xi and Russia's Putin can use this as their own justification for operations in their regions under an emerging world order that is defined not by rules or international norms, but by strong men executing operations in accordance with their personal interests. Let's bring in Academy Securities head of macro strategy, Peter Tchir, who works with the general, as well as Bloomberg Intelligence chief emerging markets credit strategist, Damian Sassower. And Damian, before we get to Peter on this broader issue, I want to get to you about one specific issue, which is that of the money owed to these big oil companies. We've been talking about it a little bit. President Trump has referenced it a number of times. What are the sums and what is the likelihood that they see that money?
Well, I think you're right to focus on the U.S. energy patch, right? Because the short-term impact of what's going on in Venezuela is going to show up first in Conoco, Phillips, Exxon, Mobil, all of whom, according to the International Court of Settlements, are owed, in the case of Conoco Phillips, $10 billion, including interest payable. It's $1.5 billion to Exxon Mobil. It's another $1.2 billion to Greylock. I mean, Greylock isn't listed anymore, but the first two are obviously seeing the benefits of that. And then it's the Gulf refiners, the ones who can handle that heavy, sour crude oil out of Venezuela. They're also poised to benefit. That's Valero, PBF, Phillips 66. The ones that probably, you'd be a little bit bearish on here are the Alberta oil sands producers like Suncor, because obviously this heavy oil out of Venezuela is going to displace that to some extent. And then as it relates to the bond market, it's all about the Venezuelan PDVSA dollar bonds, which are up 8 points today, off the back of a 100% gain last year. I mean, granted, these bonds are trading at, call it 60% of what their value was when the country defaulted back in 2017. But today's move is pretty notable, to say the least.
Well, it's a country that has deep amounts of debt. And Peter, to bring you into this, China's also on the hook for some of it. Are we witnessing now a restructuring of not just the U.S. flexing its military might, but maybe in these cases coming in and changing the stack, changing priorities, and making sure that America gets the benefit over other countries when it comes to credit outstanding?
And we've been talking about this competition with China for 6-7 years, and this is really kind of an escalation to me. And we've had the trade war, but it's really mainland China versus the U.S. Now we're going to take the fight to Venezuela, right? We are going to fight for rights for our companies, for back pay, for things that were taken from us. China is clearly going to try and use their lawyers to fight for things that they believe they're entitled to. So I think this is really, you know how the Soviet Union, we always had these kind of proxy clashes. We had these clashes in other areas. I think this is the first time we're seeing that with China, and we're going to test how strong the resolve of people to stick to the Belt and Road Initiative is. I think China's made a lot of missteps. This could be a very big opportunity, but I think there could yet be friction, and that could be the only thing that hurts the U.S. markets of China's reaction.
Can I actually, I want to tug at one string there. Right there is obviously weaponry and warfare, there's economic warfare, and there are legal battles, right? How important is that third aspect to the competition between the U.S. and China?
I think it's hugely important, right? We are sitting here looking at, okay, we want this because you owe this, we're going to take this. China clearly wants to say the same sort of thing. This is going to set down in court of law. I think Trump is not necessarily...
In the U.S. court of law.
I don't know. It's going to be probably all over. I'm sure there's going to be some UK governance in this. There's going to be international. There's going to be a lot of debate over where it should be. The lawyers are going to get rich. In the meantime, I think Trump is going to try and continue what he's done in the U.S. is push boundaries and then prove that I'm wrong. So I think there's a real risk that this gets pretty contentious very quickly. And the nice thing on the economic side, we don't have this kind of advantage over China, but anything military, there's the tyranny of long distances. So Taiwan's hard for us to get to. South America is almost impossible. Chinese Navy's, it's better than it once was, but it nowhere near can project the power that the U.S. Navy can. So this becomes really interesting on that perspective in shipping.
Okay, so the lawyers get rich. I feel like that's the outcome of this in terms of
the bankers get rich.
Yeah,
the oil executives get rich.
Right, because this is something that you've written about too, Peter, this idea that the U.S. is going to be asking some serious concessions from oil majors who go into Venezuela. And Damian, I want to take that to you, this idea of just how much bonds can really benefit of not just Venezuela, but of oil producers and oil producer equities. Yes, they're up today, but are we going to look at a situation where, yes, they can go in, but they're going to be confronted with a surplus, more of a glut of oil, and a U.S. government who's not as friendly to them in what they demand for them as the outcome of them entering into Venezuela?
Well, we've been hearing all this talk about $100 billion is necessary to get Venezuela oil back online. It's not that. It's $15 to $20 billion to expand 500,000 barrels per day out of Venezuela. That's still 25% cheaper than the deepwater projects we're seeing in Brazil and Guyana. So there is a benefit from a cost-benefit analysis to go into Venezuela because, look, I mean, a lot of that infrastructure, dilapidated as it is still there. So there's a starting point there. And so, look, I mean, you're absolutely right. This is not about narco-terrorism. It's not about the Cartel of the Suns or Tren de Aragua. It's about China, and it's about supply chains. And that, to me, is the fact that China, look, has been buying discounted barrels from Venezuela in RMB. Look, the free lunch is over. And so China, if you saw out of Beijing this morning, Beijing called in all the big Chinese banks to say, hey, we got to assess what your credit exposure is to Venezuela because the world has just changed overnight.
By the way, what other assets are key in this economic warfare? I mean,
rare earths.
Exactly. So
I mean,
this is
minerals,
what happens there,
uranium. There's utilities. I mean, Ellicott used to be an issuer of U.S. dollar debt. There's tourism. I mean, huge coastline out of Venezuela. It is a huge opportunity, and that's why I think in any restructuring you're going to see out of Venezuela, you're going to have to give some sort of equity to the upside of GDP growth in Venezuela as a kicker to get investors back in there and to get them happy with the current state of affairs. And by that I mean GDP warrants, stuff that's going to link the future gains of creditors to the success of the Venezuela restructuring and transition. And I think you're going to see some sort of stuff along those lines.
Another asset is that I think we don't talk about enough, or not as much as rare earths, oil, and gold, is chip production capacity, right? That's all in Taiwan, or let's say 80 to 90% of it. Does China move to take Taiwan using some pretense, hey, they're selling drugs here too, you know, or do they hold off long enough for us to put chip capacity somewhere else?
So I don't think they're going to do anything reactionary. They certainly don't have the military capability probably today to take this over effectively and seamlessly and keep the chip industry intact. They will continue to put pressure on. I think we could see more gray zone tactics where they either disrupt, via cyber, something going on in Taiwan. Maybe they use the maritime militia to spread out. Having said that, we've been a big believer of pro-sector. There's production for security, and Intel's been one of our top calls in that. I think you are just going to see a really aggressive push where the U.S. government kickstarted this, but it's American capitalism that's going to push it to the next step, right? People are scouring the universe for companies that have mining rights that have been unused. What technology do we have that can process and refine things? I think this just tells everyone, hey, this is serious. The world order is changing. We are going to produce and refine things here that we need for national security. Chips is going to be top of that line because we cannot afford to have China do that. And the realization's there that not only can we not afford it, China might do it, and B, we have the resources if we effectively focus to do it ourselves. So I'm very excited about that part.
Well, it also just shows a President Trump who is willing to take drastic actions, even if there is a threat that he gets pushback from markets, from political standings. It throws to the wayside any idea of a taco trade, at least when it comes to geopolitics. So how should we take Trump's threats with Colombia, with Cuba, with Greenland? Should we look at those differently now?
I think you can take a look at them differently. I think in each case, the one thing I want to pull back is I do think there is an element to the cartel attacks here that is understated. So one, right, we have a lot of forced migration out of Venezuela. People have not liked it. If you make it a safer, more productive society, partly by killing off the cartel, that's good. A lot of the crime in the U.S. that has happened from illegal immigration tends to be from these cartel members. So if you cut off the head of the snake, do they wither and die? But more importantly, I think this is going to set up the stage for late Q1, late Q2, serious talks with Mexico and say, Ms. Sheinbaum, it's now time to do something about your cartels. You can do it with our help, or we can do it without your help. But something is going to be done about the cartels in Mexico, right? We've set up a lot of new rules of engagement. We've shown that we're willing to do stuff. This operation was phenomenal, right? We come in, clearly there was inside help to make it so successful. So he doesn't have the support, Maduro. I think if you're the cartels in Mexico, this is a really strong message to you. And again, that would probably be the best thing that could happen to Mexico is getting rid of their cartels. And then you can really see this North-South America alliance grow and be extremely profitable.
What happens then to those currencies? What happens then to that debt? I mean, I'm looking at WCRS Go on the Bloomberg terminal, right? And I put in emerging markets currencies. The dollar has done fairly poorly against a lot of them over the last 4 quarters.
Right, over the last 4 quarters. But now what you're looking at here is a little bit something different. And for me, look, I mean, this is definitely a dollar. This fuels the dollar bearish view from a foreign investor standpoint to the U.S. So I think in the short term, you could see the dollar weaken on this because, as you rightly point out, Trump is showing very little regard for the interests of other countries.
The dollar weaken against the broader basket or against these EM currencies?
Broad dollar weakness. Now, let's talk about Latin America. Latin America is rife with high yielders. Mexico, Brazil, and Colombia are the highest yielding countries from a fixed income standpoint that you're going to find anywhere in emerging markets. And if you're going to see dollar weakness and you're going to talk about higher yields, well, my goodness, I'm an EM investor. I'm looking to carry in those countries. That's just me. So I think it's actually bullish for the currencies of those 3 countries. Now, let's be also clear. Colombia has an election in May. And by the way, the pivot to the right is real. Pivot to the right meaning pro-U.S. So I do believe that, Gustavo Petro is not going to be in power for that much longer. I mean, he won't be. The next person to take that chair is going to be more pro-U.S. in my opinion. And you got Brazil at the end of this year as well. And look, Lula has got 9 lives, don't get me wrong. But, he will be pro-U.S. if that serves him. And so it's going to be very interesting. Claudia Sheinbaum has shown a willingness to work with the Trump administration in Mexico. Again, all of these 3 countries, they had to kind of come out against this action in support of the UN Charter. But let's see where things are over the medium term.
Just like the vice president, right? Delcy Rodriguez, her first couple of speeches were fiery, anti-American.
For sure.
Bring back Maduro.
Quickly changes her tone.
And exactly. And last night she's like, you know what? We're willing to work with you.
Well, but Damien, how much of this, because those views you could have had them before this all happened. Yeah. How much has changed now? How much has changed now that Trump is reimposing not a Monroe Doctrine, in his words, a Don Rowe Doctrine?
The only thing that's changed for me, quite honestly, is I was very, very constructive on the dollar coming into this year, thinking, okay, maybe we'll see a little bit of weakness, but by and large, I expect broad dollar to be up in 2026. Now I'm not so sure, because this definitely fans the flames of all the dollar bearish talk that's out there about the U.S. the U.S. dollar as the world's reserve currency and how that needs to end. And it is good course of business by these other countries to diversify their exposure into other currencies. I'm not suggesting that it's not going to happen. The question is, will it be enough to cause the dollar to weaken relative to the broad basket? I'm not so sure, but certainly today I'm a little less bullish on the dollar than I was, just at the end of last year.
Hey, can I just ask one more, Peter, about Russia? Because it's not clear. We want to have dominance over China and get them out of Venezuela. But do we want dominance over Russia as well? I mean, we let their tanker go with no fight at all, right? The Bella 1, which is now called the Marinera. They painted the Russian flag on the side, and the Russians said, that's ours. And we haven't touched it.
Well, I think that's a great question. One, I think we're going to go back. When we talk about emerging markets this year, we have to be very specific and regionally specific. I think South America, great place. Central and South America, there's an ETF, ILF. That's an interesting way.
Great place to invest.
I do not want Asia necessarily. I don't want, so EM is too broad. You need to be more specific. I think with Russia, it's unclear. I think he did not want to push a fight with Putin right now. We've got enough to handle with this area. Again, if we're not done with maybe Cuba and Colombia, I think he lets Putin get away with some stuff for now, and then we figure it out. But I think both Putin and Zelensky have to be like, okay, the next time the president comes and threatens us or tells us, if you don't do this, this might happen, we have to take this much more seriously. Again, I think we're reestablishing deterrence. We did it when we attacked the nuclear facilities in Iran. I think we're doing this now in there. And, deterrence, it's a bit scary, but you really have to use and show your willingness to use your capability to have anyone feared. And for the last 10, 15 years, right, the U.S. kind of drew red lines in the sand or lines in the sand and like, we're not going to back that up. We're now backing these things up. We're being aggressive. I think it's changing the calculus. So while it's direct confrontation with China, I think it's given every world leader in a precarious position something to think about, and probably not good for them.
Peter, just less than a minute, but isn't this also just a huge U.S. control of the oil industry now? 40% of the production in North America now overseas?
Yeah, and I think it's going to change the negotiations that we go through with the USMCA renegotiations that are going through. One, I think Mexico is going to have to figure out how they fit in. I think that's where the protection is going to come on the cartels. Canada with the tar sands. Okay, how do we now play nicer? Because there are huge advantages with what Canada has. There's already a lot of refineries set up in the middle of the Midwest to take that. There is a lot going on, and I think it creates this opportunity for almost this fortress North America where we can be very, very successful on this production for security.
Really seismic changes. Peter Tchir, Damien Sassower, thank you both so much for joining this morning. You are watching Bloomberg Open Interest.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are higher to kick off the first full trading week of the new year. S&P futures up about 0.5%. NASDAQ futures up more than 1%, driven higher by the same things that pushed us higher in 2025. You've got all of the chip makers, especially the memory chip makers. You've got NVIDIA rising higher. All of the AI trade is up. And, of course, you also have oil companies up today after what happened in Venezuela, and some defense companies moving up a little bit. Speaking of defense, you've got the National Guard here ringing the bell at the New York Stock Exchange out of the state of New York. We thank them, of course, for their service. And speaking of people we thank for their service, Versant is ringing the bell at the NASDAQ market site. You got Morning Joe over there. I saw Becky in the corner. There's Joe Kernan. So all the people that we watch or that we listen to on the news outside of the Bloomberg universe ringing the bell there, which is pretty fun, right? They're like celebrities.
Yeah. They also
of a sort.
Didn't they ring the bell recently too? Was like some sort of anniversary? I seem to remember that this is like the second time they've rung the bell.
I did see some other CNBC people. Squawk Box?
Yes, it was Squawk.
Yeah.
That's what it was. Yes, it was an anniversary for Squawk. So yeah, more fun for them ringing the bell. In this equity market, it is the story of the day, of the year, here on January 5th. The first full trading week of the year. Chevron shares up 4.6%, seen as one of the largest beneficiaries. If the U.S. does take control of the Venezuelan oil patch, the only U.S. company that is currently operating there, Exxon, Conoco, Phillips, they both were in Venezuela until 2007 when Hugo Chavez nationalized the oil patch. So could they go in? Would they benefit? Conoco, Phillips up more than 6% here at the open mat.
Yeah, and will they get money back, which is, I think, another thing that investors are sort of hoping for. Investors hoping that we get another year like we did last year and the year before. And the year before, AI stocks climbing as bullishness on Wall Street shows no signs of abating. Let's bring in Citi's head of U.S. equity trading strategy, Stuart Kaiser. And Stuart, we have had a phenomenal run, right? We're up like a compounded 80% in 3 years. We haven't seen that since the late 90s. Do you expect 2026 to be a repeat?
Yeah, we're reasonably bullish. Our U.S. equity strategists have a 7,700 year-end price target, which would be about 12% upside. So yeah, we're feeling pretty good about things. I think the big test early in the year is the proverbial big beautiful bill. How much stimulus does that provide to an economy that's already experiencing kind of a rising unemployment rate? But yeah, our base case is still solidly positive U.S. equity markets.
What do you think about lenders' willingness to continue to lend money to some of these AI names? Because we've seen shakes in that to end 2025. How does that play out this year, and how big of a factor do you think it will be for the leadership of this equity market?
Yeah, I mean, we do think it's important. If you look at companies that have a lot of capex spending but are not expected to get good revenue growth out of that, those companies have underperformed. Obviously, Oracle has been a bit of a poster child for this, and everybody's seen what's happened to those credit spreads. But to your point, I do expect investors to take a little bit more of a critical eye to what is the return on that invested capital from that spending. And we're seeing early signs of it. Is that going to impact NVIDIA, Microsoft, Apple, who have some of the cleanest balance sheets in the world? No. The question is that tier 2 balance sheet. I mean, all of the Mag 7 is AA rated or better, right? Oracle is not. Oracle is a BBB credit. So you can see sort of how the market is treating different credits, given their capex, spending commitments, and we do expect that to be a theme going forward. One
of the things I've noticed in our sort of breathless coverage of Venezuela over the weekend is people saying, hey, it's going to take $100 billion of investment over the next decade to ramp up oil production there. And my first thought is, wow, that's only a fraction of what we're spending on AI over the next half a decade. I mean, it's really a drop in the bucket. How much does this matter for markets?
The Venezuela issue? Look, there's the potential there if it becomes a more cascading geopolitical risk that'll matter quite a bit. I feel like early on, investors are treating this a little bit like how Iran got treated, which is it's a potential major geopolitical issue, uncertainty about how it develops, a potential human tragedy. But the impact on U.S. equity markets in particular is clearly going to come through the oil channel. And unless we were to see a meaningful move in oil, and most likely to the upside, you wouldn't really see a negative impact on U.S. equity markets at this point. Unfortunately, the Venezuelan economy has shrunk quite a bit over the last couple of decades, so it's less of a global GDP issue. And for U.S. equity markets, it's clearly going to be an energy topic. That said, energy is a very under-owned part of U.S. equity markets, and I think that's one of the reasons.
It's not a big part, right? I always think, I spent years covering the FTSE in Europe, and for them, oil is huge, as you well know.
Oil and banking.
Exactly. It's not the same here.
No, it isn't. It's a small part of the equity market cap, and then it's also underowned, I think, by most investors, particularly discretionary investors. So there is the chance, you're seeing some of these stocks up 5, 6, 7, 8%. I think a lot of that is they are very underowned, and maybe they're kind of viewed as a little bit of a call option on this.
Well, Peter Tchir of Academy, who we just had on, has a call about energy and energy production companies, that it's not necessarily just about Venezuela, but it's about this tilt from the U.S. around ProSec, trademarked Academy Securities. The idea that security is going to be more important than anything. So that matters for these infrastructure investments like energy. Would you believe in the same, that regardless of what's happening in Venezuela, any sort of company that touches things like restructuring both domestically and internationally are going to be important for this equity market?
Well, I think you saw that in the capital goods sector last year. Some of that is AI data center build out. Some of that is aerospace and defense. Some of that is kind of reshoring and, bringing things, back to domestic point of view. So, that is an issue. Definitely people are focused on things like global drone technology, global robotics technology, which I think you put all in that category. Clearly the stimulus coming out of Europe in the defense sector is large. U.S. is trying to ramp up that spend as well. So that is, I agree. It's an underlying theme. Is it directly aerospace and defense? To your point, probably not. It's a little broader than that. And we are now treating things like robotics and drones and chip production, frankly, as national security issues. So I think at this point, yes, national security is a topic, but it is a little bit of a different trade than it had been in previous decades. And I think people have woken up to that. And I would put utilities, frankly, in the power grid probably in that conversation as well.
By the way, how much does the Fed matter going into 2026 as we watch? We're going to get non-farm payrolls at the end of the week. And we've already had a number of cuts. But this market has done well through hiking and cutting cycles.
Okay, the Fed is communicated. I think they are truly data dependent. And you can see how rate cut pricing, through June, all below 50%. So the Fed matters, but the Fed is now data dependent. So the Fed, you could argue, is an information taker right now. So, the key here to us, and I think you saw that in the data we got in December, is you got weak employment data, which was quote unquote dovish. Equity market sold off. You then got weak inflation, which was quote-unquote dovish, but good dovish, and the markets rallied. So I think the market's telling you here that more cuts being priced in, coming from a weaker labor market, is a net negative for equity markets. And it feels like the market has sort of discounted the idea that the Fed's just going to do more insurance cuts. Chair Powell has said they're at the upper end of what they would call the range of neutral. So maybe they have a little space to, throw in one more insurance cut here or there. But at this point, they're data dependent, which means you focus on the labor market.
Well, for now, right? I mean, when one of the Kevins gets in there.
Well, we don't even know who. We're supposed to know last fall who the Fed chair was, and here we are.
Well, at the end of last year, President Trump said he already knows who his pick is.
Yeah, but I guess some things maybe have, jumped to the top of his list of things to do here to start the year. Stuart, thank you so much for joining us. Wonderful to see you. Looking forward to more conversations throughout the year. Let's get a check on the stock market right now. And NVIDIA leading the gains for this equity market, just given its size. By the way, I looked up this move screen. You can look up HMOV is what you want to do to see the history of move. And for 2025, NVIDIA contributed 15% of the S&P 500's gains. So it was a huge chunk, and it already is a huge chunk this morning. It's adding about 9 points to the S&P 500 this morning. It's up 1.5%. Mag 7 having a good morning. Tesla, Amazon near the top of the capital pile. Chevron, that gains 4.2% this morning. We'll look at the sectors in a moment. Energy having a really good day. Some of the tech names, though, also down this morning include Apple, Broadcom, Microsoft, some of the drug makers, AbbVie, J&J, Eli Lilly, down because it is a broadly risk-on day. If you look at the sectors that are moving, energy, again, the best performing sector, trading Venezuela, and the possibility that the U.S. takes control of oil in Venezuela. I showed you what Chevron was doing, but also Conoco, Phillips, a lot of those names, and energy production companies that make energy equipment doing really well too. Consumer discretionary, again, you can see some of the safer things not doing as well today. Real estate, healthcare, consumer staples, utilities, all to the downside this morning, Matt.
All right, coming up, we have one of the giants of the oil patch, Ed Morse, possibly the most widely read analyst on oil, gives us his outlook for Texas tea, and he sees it going lower from here. I know because I listened to him on Surveillance earlier this morning. We've got him next from Hartree Partners. This is Bloomberg Open Interest.
take a look at some of the top calls this morning, the analyst action that we're following. First up, CFRA is downgrading Netflix. They've warned of a potential acquisition of Warner Brothers Discovery. That would be a major departure from the streaming giant's growth strategy. They said that a possible bidding war with Paramount could force Netflix to take on higher leverage, creating risks that outweigh the benefits. Netflix, though, up 1.2%. Yes, that story is still ongoing. Next up, Arete Research is upgrading Roku to a buy, saying deeper integration with Amazon's ad platform could drive growth into 2026. They added upside also from the Roku channel. Finally, Estée Lauder, that gets a double upgrade at Raymond James. Raymond James saying that the company has likely hit an earnings bottom, a trough, and is now moving into cleaner execution-led recovery. Raymond James also pointing to improved sales trends in the U.S. and China, stronger innovation, and easing pressure in travel retail. Matt, those shares up 2.8% this morning.
All right, so look at some of the upgrades and downgrades. Let's get back to President Trump's vow to rebuild Venezuela's energy sector. That's a multi-year, multi-billion-dollar bet. Rapidan Energy Advisors President Bob McNally says this is a good time to take that risk.
I think what the market doesn't understand is the president's willingness to take risk when it comes to confronting adversaries on top-tier foreign policy challenges, even if energy is at stake. And the reason why, Anne-Marie, and you just mentioned it, the president, the White House believes, and I happen to agree, we're heading into oversupply. He can lean into this softening crude market and take risk, even with Iran and Russia, which are really more important near term than Venezuela.
Let's bring in now a legend in the oil patch, Ed Morse, formerly at Citi. He's now a senior advisor and commodity strategist at Hartree Partners. He has also advised presidents on oil, helping to shape policy here in the U.S. and globally. And I'm happy to say Dr. Ed Morse is here with us on set. Thank you so much for your time this morning. Let me first ask you about the comment on softening oil, because I happened to hear you on surveillance this morning saying we could get oil down to $40 a barrel, and that may be why we don't see such a big pop after this move in Venezuela.
So the oil market looks like demand and supply are out of balance, even with what's going on with Iran and sanctions on Iran and the Russia-Ukraine battle. The question is how big that surplus might be and how much risk there is in the world to put the longs in the market to stop it from falling. But we've had, 3 years of lower and lower oil prices, and part of that is certainly cyclical, and it relates to challenges on the demand side as well as a big surplus on the supply side.
To zero in on Venezuela specifically, when Trump has been asked about various things like, will you let opposition leaders back in? He says, I don't know, I haven't thought about that, but what I have thought about is reviving oil in Venezuela. Analysts have pinned the project at something like $100 billion. Ed, what does a trajectory and timeline look like for getting Venezuela at peak production?
So the timeline and the projection is really long. The timeline has to do with what the very things that Bob McNally said. This is a world of oversupply, and it's a world of risk. And we're seeing not just the third consecutive year of oil prices going down, but the third consecutive year of less investment going into oil, because there is more than enough of it to meet the projected supply, at least theoretically. And the problems, have long been, by that I mean a good 3 years, have been Russia-Ukraine and the distortions to supply chains and the distortion to trade and the sanctions imposed on Russia and the sanctions imposed on Iran. But we see plentiful supply coming out of available for those countries if they decide to put oil in the market, and they want to. And we see, strength in the U.S. And people kind of look now at the U.S. and say, well, we're seeing less capital going into the U.S. oil patch. And there are even some people projecting that we're going to have less crude oil production in the U.S. in 26 than in 2025. But if you look at overall liquids projection from coming out of the U.S., natural gas liquids are part of that. Biofuels are part of that. The U.S. is a 23 million barrel a day producer of liquids. It's not a 13.7 or 8 million barrel a day producer of crude only. And on the NGL side, we're an 8 million barrels a day producer of NGLs. The world projects that NGL production is going to continue to grow at about 1 million barrels a day per year. That's about equal to oil demand. NGLs can be used for transportation fuel. They can be used for power gen. They can be used as an industrial fuel. So there's a lot of substitution effects there. And the U.S. is the leading natural gas liquids producer as well. So we're going to see liquids production growth come what may in a world that's not going to likely see much in the way of more than 1 million barrels a day of demand growth.
By the way, you've been to Venezuela dozens and dozens of times, most recently just 3 years ago, right? So how does their infrastructure look? Because as some people say it could take $100 billion of investment over 10 years. Others say, no, 15 to 20. The infrastructure is still there. It's just degraded.
No, that's two different kinds of things. So the infrastructure to get production growing to from 900,000 barrels a day, more or less, to 1.3 million or 4 is about $20 billion. The infrastructure needed to get back to a 3.2 to 3.5 million barrel a day producer is in the $100 billion range. And the question is, who is going to take the risk of that investment in a world where oil prices are soggy, when there are a lot of other kinds of opportunities to invest in oil? And when prices go up, we're going to see capital going back into the U.S. oil patch because it's the easiest oil patch to get more oil from quickly. And there are other places in the world like that. Argentina is now booming because its shale play is similar to the U.S. shale play. Brazil is booming because it's become a safe harbor for investment. And even though most of it is offshore, it is not that hard to develop. The same is true of Guyana. The same is true of lots of places in West Africa. So Venezuela is going to have to compete for the capital in other places that are less risky. And the question is, what are the guarantees that are going to be there? President Trump has indicated, and his team of people have indicated, that this is a choice for the Venezuelan government to make. What are they going to do to make it a more attractive place to invest in oil?
Even so, we've seen some, like the likes of Oleg Deripaska, a Russian oligarch who himself has faced U.S. sanctions, saying that Washington now has a more controlling hand in this oil market and could keep prices below $50 if they wanted to. Does this change the U.S.'s position in overall international oil markets, or even as it comes to their influence over OPEC Plus?
So we have to remember that the basics are not the U.S. government. The basics are the price of oil. The price of oil is what determines who's going to invest and where they're going to invest. And where they're going to invest is a function of how rapidly can you invest it and how safe is the investment. So the U.S. stands out as a very attractive place with respect to a world with very volatile prices. But the U.S., even with all of the energy dominance themes that Trump has in many ways rightfully focused on, the U.S. is not that energy dominant that Washington can, as a government, actually control the world market.
Can I ask a question about energy dominance, not related to the U.S., which is interesting, and you talked about that on surveillance, but in terms of what's going on in Europe, why are they so beholden to the interests of Vladimir Putin? They still directly or indirectly pay Russia for energy. Why can't they, with this glut of oil and all the LNG we could ship them, be independent?
Well, Europe basically is independent. So, there's the European countries who depend upon fossil fuels out of Russia are very few, and the amounts are very limited. They include the Czech Republic, they include Slovakia, they include Croatia, but the main countries are not importing either oil or gas. The oil market is kind of easier. It's more fungible. And yes, Russia is a close neighbor.
Goes through India and then they buy it there.
Well, the Europeans buy product. The product market is a world unto itself. It's very hard to disguise what's Russian and what's not in terms of the product market. But if you look at their main dependence, the main dependence was not on seaborne crude oil. Their main dependence was on Russian pipeline gas. That is a real dependency. And they're not any longer dependent on Russian gas. They're dependent on other people's gas. And a lot of the gas that they've come to replace the Russian gas is American gas, which happened to be, bubbling up at the very moment when those sanctions were put on Russia. So Europe's problem when it comes to energy is that they are nowhere near self-sufficient. Yeah, there are a couple of countries. Norway now stands out as having a surplus on the fossil fuel side. But Europe has been an importer of fossil fuels for as long as fossil fuels have been, predominant in the oil market, starting from around, 1910. So for a long time. And Europe's position is one of massive vulnerability as compared to other places.
Ed, we could do this all day, and I wish we could. Not enough time with you. You'll have to come back and join us very soon. Ed Morse there of Hartree. Coming up on the show, former Commerce Secretary Wilbur Ross will share his take on the Trump administration's foreign policy. All of that to come in the next hour. This is Bloomberg Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. A quick check on stocks on this Monday, the first day of the first full week of 2026 in terms of trading. S&P 500 up 0.6%, now at 68.97. So getting closer to that 6,900 or thereabouts level that we hit a couple of weeks ago before the pullback. NASDAQ 100 gaining a little bit more as the NASDAQ is obviously got the heavier tech stocks, or they have a heavier weighting. So NVIDIA, for example, heavier on the NASDAQ, and it's up only 0.75%. It had been up more than 1.5% in the pre-market. TSMC, the ADRs of the Taiwanese semiconductor, up 1.8%. Obviously, a lot more importance put on that after our Venezuela actions. And you can say that again about Chevron. Right now, up 3%, the only U.S. oil producer that has a license to do business there. Halliburton supplies these energy producers with equipment. It's up more than 7%. Brad Jacobs, QXO, right now up almost 7%, and Estée Lauder gaining 2.33%. I would have thought it's a French company, right, with a name like that, but it comes out of Queens. Coming up in the next hour, Wilbur Ross talks about the Trump administration's foreign policy agenda, plus Hans Humes has done plenty of business in Latin America. We bring him on as well. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Dani Berger. What a start to
Happy
2026.
New Year, by the way. We haven't said that yet, and we won't say it anymore.
Yeah, it feels like 2026 has been the longest year, and here we are on day 5. A day 5 that's seeing rallying. We're just 1% away from all-time highs. The drama taking place in Venezuela only affecting a handful of companies like Chevron and Conoco Phillips. And Matt, some breaking data just crossing now.
Yeah, we're getting some eco data, and we're going to get a lot this week. But right now, I believe we're getting ISM. Let me go to my eco screen here. We are ISM manufacturing, prices paid, new orders, employment, and it looks a little bit worse than anticipated. However, we have an expert here on set with us, Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, what do you make of this? The first in a slew of data that we're going to get.
We're finally back to data that is reasonably up to date, and unfortunately, this is unhappy New Year. This is December. The ISM manufacturing folks reporting that the index falls to 47.9 from 48.2. That is definitely not good news. Prices paid holds at 58.5, so no change on the inflation front. But production falls to 51 from 51.4. New orders are about the same, 47.7 from 47.4, but still well below 50. And we're looking at things like inventories falling 45.2 from 48.9. So overall, this is a disappointing report. Now, the one thing that we do want to do, and I'm going to have to check my email for the actual numbers from the ISM, is you want to look at what the companies are saying about it, because we've seen in the regional numbers that have come out that companies have been saying that we are still facing problems with uncertainty about what's going to happen with the overall economy. And
I feel like, Mike, isn't it fair to say that we always have a certain amount of uncertainty with? I've been doing this job for 26 years now.
Yeah, but okay, it's worse.
And
right?
the one mantra that has continued unabated is uncertainty.
Yeah, but I mean, how often have you lived through periods where you've just gotten months of no official U.S. data?
And we've still got uncertainty going forward because we don't know if the tariffs are going to be ruled legal or not, and what happens from here with Venezuela, et cetera. Here's an easy, simple quote from a company in here in the machinery business. Trough conditions continue. Depressed business activity, some seasonal, but largely impacted by customer issues due to interest rates, tariffs, low oil commodity pricing, and limited housing starts. So if that's summing up the way American manufacturers feel, it doesn't suggest that we're going to see any kind of major turnaround in the factory sector anytime soon.
All right, Mike, thank you so much for joining us. A busy week, which you'll walk us through, including non-farm payrolls. Bloomberg.
Can I also,
yes?
A little bit of a tease, right? Because we have an American manufacturer coming on this program in just about 30 minutes' time, and that is Nick Pinchuk from Snap-on. And one of the things that he's telling us, according to the producer notes I've read, is that he's facing, and his mechanics are facing uncertainty as well. So that is fair.
Yeah, a conversation you don't want to miss in 30 minutes' time. Mike, thank you so much for joining us. A conversation equally as important. Katrina Dudley, Franklin Templeton Public Market Senior Investment Strategist, joins us now as well. Katrina, you've always been very bullish on this American economy. We're finally starting to get data coming in. We're going to get non-farm payrolls on Friday. Is there any reason to suspect that 2026 will have with it any less resiliency than we saw last year?
So we're coming off 3 years of double-digit gains in the S&P. So being bullish has been the right thing and the right call to make over the last 3 years.
And you have been.
Thank you.
Yes.
And I appreciate that. And look, it's hard. You're going into 2026 and you're saying, why should I be optimistic? I've got 3 years of double-digit gains. But look at earnings expectations. Consensus numbers for earnings are 14% earnings growth. And going back, valuations are probably, fair to maybe on the high side, and we acknowledge that. But the earnings growth is what drives markets, and we're seeing positive earnings growth. We've got double-digit earnings growth for 2026. That will be supported by the interest rate cuts that we've already seen in the last 4 months of last year. So you've got a little bit of a tailwind there. And then finally, we've got breadth. And I have been talking about that. That did not work for us in 2025. You still had the concentration, but we've got breadth in the market, and the concentration concerns that people keep talking about, I think are going to be diluted when we see this wall of IPOs that are going to come with some really big, there's like 5 IPOs with over $40 billion of market cap each, not collectively, each.
What do you need to see, though, in terms of companies that are already trading, right, coming out with earnings, the S&P 493? What do you need to see as proof that we really are getting a broadening out in, earnings success from companies outside of the Mag 7?
I actually think they've already done it. In the first 3 quarters of the year where we've had reports come in, it's 9% earnings growth. So not quite double digits, the double digits earnings growth that we saw in 2025.
And what does that compare to in terms of the Mag 7?
The Mag 7 is, they're in the high 20s. So look, they're not growing like AI, but these are more your traditional companies. They're more established companies. And you wouldn't expect them to be growing earnings, in those really high 20% ranges, but 9% earnings growth in an economy that's growing 2 to 3 with inflation that is under control, but still a little bit of a risk, to me, is a very good setup for that broadening argument. As I said, it didn't quite work as well as we thought in 2025, but we think in 2026, we have that layered in with at least consistent performance out of the AI names.
I think a lot of people struggle with this, of what the economy is doing, because of things like the ISM this morning. I'm just looking through some of the company comments. It's not been a great year. We've had some success with holding the line on costs, but real consumer spending is down, and tariffs are ultimately to blame. Trough conditions continue, saying that our company is struggling with customer orders and financials overall. Basically, every single comment here is not good. Morale is very low. We keep seeing this, Katrina. There are companies out there who are struggling, and some of the ones in here blaming tariffs. Who's not to say that that becomes a bigger feature of the economy this year?
So tariffs actually have a positive and negative effect to them. When tariffs go up, obviously it's not great for those companies. But if tariffs get reversed, isn't that a positive for some of these companies that headwind that they're talking about, abates? Secondly, look, the housing market is a big driver of a number of those machinery, equipment companies and everything, and the housing market has not been strong. So why would you expect the housing market to potentially get better, over the course of 2026? First of all, our unemployment numbers, if you look at, the unemployment claims numbers and the jobless claims, have been very benign. So people are holding on to their jobs and they're getting reemployed. So that's the first kind of check mark. Interest rates are down slightly, so that makes the mortgages more affordable. And then finally, time is also your friend. You don't get younger any day. And so, people, household formation, creating families, and it's when we create those families. I live in New York City, and if anyone's lived here, you squeeze into that apartment apartment, at some point you do need to get a bigger place or something. So I think that there's some of the drivers of the housing market.
Just got 30 seconds here, but I want to ask your take on Venezuela because it's the huge news event, but doesn't seem to be impacting markets too much.
I think it's not impacting markets because of the fact that, oil would be the biggest commodity where you'd see impact. And in the short term, their infrastructure, transportation, their oil infrastructure is just not in a great state. So while at peak they were 3.5 million barrels, they're down to 1 million. You've got a long runway before you see that supply coming onto the market.
All right, Katrina, great having you here. And we hope to see you much more often in 2026. Katrina, Dudley there of Franklin Templeton. Let's get a look at what's going on in these markets. On an index level, you're going to see gains. S&P 500 at 6,900. That's the cash level that we hit 2 weeks ago before we started pulling back into the end of 2025. You see the NASDAQ gaining about 1% right now, and the 10-year yield coming back down a bit to 4.16. We saw it jump up on New Year's Day, I think, to almost 420.
Yeah, still though was the best year for the global ag, so the bond index since 2020. So bonds did extremely well, readjusting to what they expect will be a rate cuts coming from the central bank. Coming up on this show, we get back to the top story of the morning, President Trump's capture of Venezuelan President Maduro, highlighting his new world order. And the UN Security Council, they are holding an emergency meeting now on the situation. You're looking at live shots from that, the Undersecretary General speaking at the moment. Wilbur Ross, former U.S. Commerce Secretary, will be joining us next as the situation unfolds. This is Bloomberg.
Casualties resulting from these actions remains undetermined. In a statement on social media,
we're going to run the country until such time as we can do a safe, proper, and judicious transition. So we don't want to be involved with having somebody else get in and we have the same situation that we had for the last long period of years. So we are going to run the country.
President Trump speaking on Saturday, confirming that the U.S. will run Venezuela until a transition is organized. Let's head to the White House, where Bloomberg Washington correspondent Tyler Kendall is standing by. Tyler, at this point, what do we know about the president's aims with Venezuela, and what happens next in the country?
Yeah, hey, Dani. Well, it is clear that one of the first priorities here is going to be a focus on Venezuelan oil production, as President Trump himself has indicated that he does not think elections can take place until the industry is rebuilt. In fact, we also heard from the Commerce Secretary Howard Lutnick yesterday indicate that the administration has been in touch with some other industries as well, including steel and those in the critical mineral supply chain, as the U.S. takes more of a vested economic interest in the future of the country. The White House has also laid out some other priorities here that they need to see met in the immediate term, including a stem of the illicit narcotics flowing from Venezuela. And they are also asking the country to cut ties with some key U.S. adversaries, including Iran and Cuba. We'll have to watch how this evolves in the coming days, as a senior U.S. official confirms that a coalition will engage diplomatically in those remaining in Venezuela's government. And those discussions will be led by Secretary of State Marco Rubio. Rubio has already been in touch with Nicolas Maduro's Vice President Delcy Rodriguez, who is now indicating that she does intend to cooperate with the Trump administration. In fact, we got a statement late last night from Rodriguez where she says, in part, quote, "We extend an invitation to the U.S. government to work together on a cooperation agenda." Of course, this marks a sharp turnaround from the remarks that we had heard from her in the immediate aftermath of the strike, where she condemned U.S. action and called for Maduro's return. So, Matt and Dani, at this point, there are still a lot of big questions here at the White House on the path forward. But the Trump administration has signaled that it does intend to work with Rodriguez and monitor her actions in the days ahead.
All right, Tyler, thanks very much. Tyler Kendall there reporting from the White House. Now, Nicolas Maduro faces U.S. drug trafficking charges, as Tyler alluded to there later today. Bloomberg's Miles Miller joins us now live outside the Southern District New York court in Lower Manhattan. We're looking at a shot. Was that a live shot of a helicopter blade spinning over?
I believe it was earlier
No, that
today.
was earlier today when he was transferred from the MDC in Brooklyn to, I guess, SDNY with DEA agents. Miles, what do we expect to happen from here on out?
Yeah, Nicolas Maduro and his wife are here in federal court in Lower Manhattan this morning facing those narco-terrorism charges. 4 counts: narco-terrorism conspiracy, cocaine importation conspiracy, possession of machine guns and destructive devices, and conspiracy to possess those weapons. If convicted, he is looking at life in prison. Maduro, of course, spent the weekend at MDC in Brooklyn, the same facility that held former Honduran President Juan Orlando Hernandez. Hernandez, of course, was convicted in 2024 of cocaine conspiracy and was to spend 45 years in prison, but of course was pardoned by President Trump last month. In this case, it's much bigger, of course, because this narco-terrorism charge is key. It alleges that Maduro intended to benefit terrorist organizations including FARC, ELN, the Sinaloa Cartel, Tren de Aguas, and the Zetas. And they lay this case out in really stark detail. They say from 2000 to 2006, while he was in the National Assembly, he moved cocaine under the protection of Venezuelan's law enforcement arm. While he was foreign minister, they say he gave diplomatic passports to drug traffickers and used government planes with diplomatic cover to move that drug money. And if that's not crazy enough, what we know is that they've charged their son, who they've nicknamed the Prince, who and also the Interior Minister, for doing something that probably you would only have seen in movies: moving drugs on Venezuelan state planes to come here to the United States. In one instance, we're told he took 2 flights on state oil planes to move drugs. They'll be in court at 12 this afternoon.
Miles, thank you so much for your coverage this morning. Looking forward to the continuation of it throughout the day, Miles Miller. And it might be charges that center around drug trafficking, but it has been a White House that is keenly focused on what happens to oil in Venezuela. For more on the fallout of Maduro's capture, we are joined now by Wilbur Ross. He served as Secretary of Commerce in the first Trump administration. Mr. Secretary, thank you so much for joining us this morning. And you oversaw the Commerce Department at a time when economic policy was increasingly becoming a national security tool. With this latest action in Venezuela, what has changed? Does that become even more apparent as a tool for this administration?
Well, I think it's clear that a lot can be done and should be done to change the economics of Venezuela. Let me give you a few data points. They probably have 300 billion barrels of oil of proven reserves. At $50 a barrel, that's $15 trillion of reserves. So in terms of being able to handle the debts that they have, which are substantial, but are only 160 billion, so compare that to oil reserves well into the trillions, it should not be that big a problem. The bigger problem is that because of poor management, poor maintenance, and running out of parts, the oil production has gone down by more than 2 million barrels a day. At $50 a barrel, that works out to about $37 billion a year cost to the economy. Those are huge, huge numbers, especially when you consider the whole population is only around 27 million people, because some 7 million people have fled the country under Maduro. And it's not just oil. There's a lot else that can be fixed. For example, agriculture is 25% of the land mass of Venezuela, but it's only 3% of the economy and only 10% of the labor force. And the reason for that is that they don't have fertilizer. Their equipment, tractors and reapers and things are pretty well broken down. They need spare parts. So there's a lot of stuff that can be improved and improved pretty quickly. Agriculture, for example, could be brought back very, very fast. Venezuela had been one of the most verdant soils in all of Latin America. And it was one of the reasons why Venezuela was as popular and as prosperous as it had been.
But Wilbur, what needs to happen?
They were bringing Colombians in to help on the fields because they didn't have enough workers.
Can I just break in, Wilbur, and ask, this is your specialty. You made your name before you ran trade policy for commerce at the cabinet level, negotiating for creditors in the biggest names of bankruptcy, TWA and Texaco and Drexel Burnham Lambert. Then you obviously became the biggest restructuring expert, or one of them in the U.S., with turnarounds of massive businesses like U.S. Steel. So this is what you do. What needs to happen for capital to go into Venezuela and do the very same? What kind of stability, what kind of rule of law, what kind of prerequisites need to be met?
Right. Well, there's a lot that needs to be done. In terms of laws, Venezuela has the weakest property rights laws in the whole world. So that has to be fixed so that you have some assurance of private sector continuing ownership. But I think realistically, companies going in now in a relatively complex situation are probably going to want guarantees against expropriation. And that's not unusual. The U.S. and multinational entities often give expatriation and foreign exchange guarantees. Now, the debt structure is mind-bogglingly complicated. They have about 160 billion of debt altogether, counting expatriation claims, counting funded debt, counting debt for oil, counting everything. Those bonds have been trading in the high teens, low 20s. They could probably be restructured in the 30 to 40 cents on the dollar. So in the overall context, that's not a very big number. And one of the few good things is that the IMF has no exposure to Venezuela. And IMF is entitled to lend up to $50 billion. So they could very well be a source of some funding.
If I can just jump in on that point before we continue, Wilbur, because some of the exposure we do understand comes from China and debt owed to Chinese banks, for example. If there is a restructuring of debt in the country, do you expect the U.S. to exert force of who gets priority in the capital stack? Does it change where back payments and different restructuring comes from, just given the geopolitics of the moment between the U.S. and China?
Right. Well, both the Chinese and the Russians had made loans to Venezuela that are payable at least partly in oil, but oil at very, very advantageous prices to them. So they are part of the problem in that they're getting oil very cheaply out of Venezuela in return for debts that otherwise are never going to be paid. Now, the oil that comes out of Venezuela is mostly what we call heavy oil, and that requires a slightly different refining process from the American shale oil, which is mostly light oil. Both China and India have very strong facilities for processing heavy oil, because a lot of the Iranian oil that they had been getting also is heavy. And in the U.S., there are a number of refineries in the southern part of the country, particularly the old Citgo refineries that were established from the very beginning to handle this oil. So while it is a little bit different and it's a little more costly to refine,
right,
at anything like $50 a barrel, it's still going to be very, very cheap.
Wilbur, can I just ask?
The extraction costs in Venezuela, once you've got it up and running and with proper equipment, are going to be very, very low.
Can I just ask,
There
Wilbur?
are
We've only
also
got
other natural resources.
we've only got a minute left here, and I want to ask.
Venezuela has lots of gold,
Right.
most of which is not being used for lawful purposes.
Well, speaking of lawful, I just want to ask.
There have been transport planes every day flying to Iran with Venezuelan gold.
Fair. We've only got a minute left, and I just want to ask you about the precedent risk here. Does removing a sitting head of state on criminal grounds create a precedent that we have to live with later? Do other great powers now reserve that right for themselves as well?
Well, the whole situation is very complicated. I'm not close enough to what's happening on the ground to figure out exactly how to resolve the political issues. But Secretary Rubio has indicated on other television shows over the weekend that perhaps the ultimate solution to the governance of Venezuela is new elections. And if they're properly supervised, that might well be an answer.
Mm-hmm. All right, Commerce Secretary, I'm sorry to jump in. We are just up against a commercial break. Thank you so much for joining us, though. That is Wilbur Ross, former U.S. Commerce Secretary, as we assess the fallout of Nicolas Maduro's capture, who is currently on U.S. soil in New York facing trial. Coming up, we get a boots-on-the-ground read of the U.S. economy from Nick Pinchuk, Snap-on Chairman and CEO. He'll be joining us next. Data out about 30 minutes ago. U.S. manufacturing contracted in December. It posted its steepest pullback of the year. Let's check the pulse of the American worker and manufacturer. Snap-on Chairman and CEO Nick Pinchuk joins us now. Nick, it's always such a pleasure to have you on, and you always give us such a good pulse of business activity, just given the customers that Snap-on works with. In the ISM data, some of the comments were so stark. Manufacturers saying that morale is very low, the cost of living is high, component costs are increasing, tariffs and other price increases are a problem. Nick, what are you hearing out there?
Well, I think that's true. The ISM data just came out, although it hasn't been, in the last 25 quarters, ISM hasn't been above 50 except for twice. It started to go up, and then we got the tariffs and increased uncertainty. So I think uncertainty rather than interest rates is driving all that stuff. And I was just with a couple hundred franchisees who interact every day with these mechanics, individuals, I'd call them the grassroots economy. And those people are still troubled by uncertainty. And what's curious about them is their base business is good. Vehicle repair is good. Vehicle repair spending is up double digits year over year. So they're in a good situation, but they're saying, gee, so many things are happening. I'm not sure where I'm going, so I'm going to hold back. They're part of the people who are, I think, given the customer sentiment down 8% since July and, not spending as much, as opposed to the people of a little more means that are out there spending because, and the difference is, the people at my end, the grassroots level, are worried that at singularity in economics, they won't be able to survive it because they don't have enough cushion. You get up another notch or so, people say, well, I can get over such a thing. And that's what's happening at the individual level.
I wonder if, the change that we've seen in regulation, not just here in the U.S., but in Europe as well, away from, more EVs to maintaining our gas engine cars is helpful to those businesses or not, Nick? And I think about, the fact that if I were to buy a new Porsche Taycan, I wouldn't really need to take it to the shop as much as if I keep my 997, where I have to do the IMS bearing and put in the Nicosil sleeves and get a bore scope and all that stuff that, you sell tools for. Is that better for those businesses in the future?
The question is, which would you rather drive, Matt? The one that you need the bore scope? I think you'd rather have that one. Look, I think over time, EVs and particularly plug-in hybrids were going to drive our business more. But there wasn't, there's not enough to shake a stick at in the marketplace right now. So they weren't really influencing our business very much. It was just a potential. So that potential will be somewhat attenuated. I think that's the situation there. If you talk about the economy in general, though, we also sell to small and large manufacturers. And I was with the National Association of Manufacturers in Washington a couple of weeks ago, and they're an interesting play. Because the large guys are kind of okay, except they're not expanding because they're waiting for the other shoes to drop in terms of tariffs. You know, the tariffs are, if you're a manufacturer, Canada, Mexico, China, still uncertain. So you're not going to do anything because you don't want to tell your board, I did this, and tomorrow say, never mind. You know, you don't want to be embarrassed like that. So people are very reticent to expand. It's why you're not seeing the tariffs have any effect there. But the place we should worry about, I think, is the small businesses, small manufacturers. 93% of manufacturers are less than 100, 75% are less than 20. And they are in a difficult situation because there's several things. One is the tariffs are costing them money and in a lot of different ways, and they don't have a lot of degrees of freedom because when you have a small business, you don't have a lot of deployable intellect. On top of which, and I don't think much has been said about this, the tariffs are a nightmare to comply with. There's different tariffs by country, by industry, by product, and it's bearing down with cost. It costs us some money, but small businesses are already paying a lot of money to regulation, $50,000 per employee per year. So they're being borne down. At the same time, which is a real big conundrum, they can't hire. 410,000 manufacturers, 410,000 manufacturing jobs have gone unfilled, and they're principally in the low, the small end. And so it's a difficulty. They're kind of small business, and you can see it play out in the numbers that the NAM, the National Association of Manufacturers, has published. The Outlook Index for small business went down by 12% sequentially from the third quarter. That's a big drop.
Hey, Nick, what about for small businesses, if I can jump in, just access to credit? We've seen stress in specifically subprime auto, but for that sector, have banks started to tighten their willingness to lend to the industry?
Actually, if you go from my world to the financial world, the effect of interest rates or credit is a legend in the mind of the financial people, I think. You don't really see it as much. Now, I'm sure it works out over time, but I don't hear anybody say that. What you hear is that you have the small businesses trapped between the Scylla of the tariffs and the Charybdis of not being able to hire. So I do think something's going to have to be done about them because I don't see the tariffs resolving themselves very quickly. And so there needs to be something to help them find skilled workers. A company like Snap-on, we can train our own. We find people and we bring them in and we train them. Any big company can do that, but small companies cannot. And it's a big portion of our economy. You know, it's the driver of what I consider to be the backbone of Americana, which is making and fixing things. And it is the outlet for entrepreneurs in a lot of situations. So I think we have to do that. This applies to more to manufacturers. Skilled labor is just hard to see, hard to find. And I think that's one of the things Snap-on, I believe, that the upskilling in the American workforce, because part of the reasons why they can't hire is they can't find people with the skills and they can't train them. So the upskilling in the American workforce is a seminal issue of our time.
Nick, another thing that I hear a lot of people complain about is it's so hard to get these F80 or F70 round head ratchets. You know, people thought that was like peak Snap-on ratchet feel. The metallurgy was different. The mechanism was different. Could you release maybe retro editions?
I guess we could. That's a good idea. I'll look into that. I don't know. That is a good idea. Only you could think that up, Matt, I think. But actually, it isn't a bad idea. I will say, though, that just what I've been saying, if I come back to the individual customers in our particular sector, and it lays out the real situation, people are buying hand tools. They're buying the latest version of the best ratchets. They're just not buying the big ticket items like this box behind me.
The boxes.
And, you know, that's a $10,000 box, and it gets financed over time, and some people are buying them, but a lot fewer are buying it now because they're reticent to get themselves tied to 3 years of payments. The people of work are much more savvy about managing their financials than I think people give them credit.
It's fair. It's fair. I only get the hand tools once in a while, and I don't yet have a big box, but I want one.
Let me know what you want. I can put you right on target.
Nick Pinchuk, Chairman and CEO of Snap-on. Always a pleasure to have you on. Hope you have a great year, and we have you on sooner than later. Coming up, we're going to bring you part of our interview going to a completely different subject with Venezuelan President Nicolas Maduro. That was back in 2021 with Eric Schatzker on site in Caracas. Plus, Greylock's Hans Humes, a longtime investor in Venezuelan debt, joins us next. This is Bloomberg Open Interest. Venezuelan President Nicolas Maduro is set to appear in U.S. court later today to face drug and weapons charges. Back in 2021, he sat down with Bloomberg's Eric Schatzker for an exclusive interview on a wide range of topics, including talks with President Trump in his first administration.
Sí, siempre nosotros, desde antes de que Donald Trump se juramentara el 20 de enero del 2017, la hoy vicepresidenta Delcy Rodríguez era canciller de la República y estuvo en Washington. En esos días previos a la toma de posesión, estuvo en la Torre Trump de Washington. Ahí deben estar los registros. Se reunió con mucha gente llegada a Donald Trump y desde entonces mantuvimos comunicaciones por distintas vías. La administración Trump desde el primer día fue un caos. La Casa Blanca, el Departamento de Estado, el método Trump, de desordenar todo e imponerse, de decir algo hoy y mañana decir lo contrario. El método Trump se impuso y nosotros tuvimos siempre comunicaciones con Donald Trump. Yo estuve a punto de reunirme en septiembre de 2018 personalmente con Donald Trump cuando fui a la Asamblea General de Naciones Unidas en Nueva York. Recibimos la llamada de la Casa Blanca, pero sabemos las presiones de John Bolton y de otros personeros alrededor de Donald Trump para impedir lo que él quería hacer, que era una reunión conmigo. Si nos hubiéramos reunido, otra hubiera sido la historia.
That was Venezuelan President Nicolas Maduro speaking with Bloomberg's Eric Schatzker about John Bolton holding him back, essentially, from making a deal with President Trump during his first term. Eric is now with us here on set alongside Greylock Capital Chairman and CEO Hans Humes, who has been a longtime investor in EM and other distressed debt, including Venezuela. Eric, let me start with you and ask, well, Bolton's long gone, right? So why?
And persona non grata in,
exactly.
In the White House,
so,
that's for certain.
One of many. So why couldn't President Maduro, President Trump said they've been in communication, make a deal since then?
Well, as to why he couldn't make a deal, I'm afraid I can't answer that question specifically, but what that passage from that interview illustrates, and what we know in addition to that, is that Maduro clearly had opportunities to reach some sort of an agreement, whether it's with Trump 1.0 or whether it's with the Biden administration, that presumably would have guaranteed him some form of immunity, perhaps safe passage out of the country, paved the way for some kind of a, call it, peaceful transition to a new government, whether it was a democratically elected government or whether it was something staged by Maduro's regime, unclear. But those opportunities existed, and they existed, it would appear, up until as recently as only several days ago. I can only imagine, now that he's here in New York sitting in jail in Brooklyn, that Maduro is reflecting on some of those decisions and perhaps regretting the fact that he didn't seize the opportunity when he had it. And I can also only imagine that he must be fuming at, presumably, what has been a betrayal by some of his closest associates. Otherwise, how is it that the U.S. military had the quality of information that it had that allowed it not just to attack Venezuela, that's not so hard, but to seize Maduro with so little in the way of casualties and collateral damage?
Perhaps, though, his willingness to call Trump's bluff also speaks to the surprise. From the international community, that has been the reaction of surprise that Trump actually pulled the trigger and did this. Hans, if I can bring it to you, how much of a surprise is this, and how altering is it to a world order where the U.S. readopts the Monroe Doctrine, and as Trump now calls it, the Donroe Doctrine?
So you decided to start with the easy questions?
Yes.
Well, first, I'd like to say that it's probably going to be much easier in terms of travel logistics for Eric to have the follow-up interview with President Maduro. But yeah, it caught everybody by surprise. And I think behind the scenes, there was a certain frustration that Maduro was effectively willing to call the bluff, to say that all the feedback was that it was unlikely that Trump would cross the line. I think that in the interview that Eric had with Maduro in 21, the name that didn't come up was, and who's arguably as or more important than John Bolton, was Marco Rubio, who was a senator at the time. So the two people who pulled Trump back from the meeting were Bolton and Rubio. Bolton might be persona non grata. Marco Rubio is arguably just about the most powerful person in the cabinet now. So I think there was, at a certain point, a frustration that Maduro wouldn't effectively agree to get on a plane and leave. Most of the feedback we'd all gotten was he would only get on a plane at the point of a gun or in a coffin. So not a surprise that that's what it took.
He avoided a coffin, right? So something went right for him there. And it seems as though Delcy Rodriguez, his vice president, whom he did mention in your interview, has capitulated. I mean, she went from saying, like, this is an atrocity, this is a violation of international law, they must bring Maduro back, to saying, like...
She's playing to multiple audiences.
Well, we're willing to cooperate.
Yeah.
Right?
And I think part of what Delcy Rodriguez represents within Chavismo is the sensible view of managing an economy in an appropriate way. Her two guys who kind of run the economy were former finance ministers of Ecuador, very well-trained economists. Their legal advisors, Denton's, are top-notch legal firm. So what she's done, her core group are not Venezuelans. The downside of Venezuelans is they're pretty, it's a bit of an unusual hive of backbiting and sabotage. So for her to get delegate to professionals to manage the economy and the legal side, she was uniquely positioned to be the one person who could operate on the international stage. If you look at the failures in the Biden negotiations, what were the toxic elements of the negotiations? What was the give of the United States? Celia Flores' nephews and Alex Saab. So all the attack points as the give on the Biden side came from that. That was not what Delcy Rodriguez would have been advocating for. In fact, she wasn't, and the advisors to the regime were very opposed to that as well. That didn't come from Delcy.
She is, I think this is what you're saying, Hans, she's a pragmatist, right, in relative terms, within the Chavismo camp or the Chavista camp. And that's useful right now for the Trump administration to have a pragmatist in place, not to have a hardliner. She is trying to keep the hardliners at bay while at the same time having conversations with Marco Rubio and figuring out what the next steps of the plan, assuming there is a plan, are for Venezuela. Those who are shocked, perhaps, that Maria Corina Machado isn't taking over as president of Venezuela should think for a moment about the fact that this has been under effectively authoritarian rule for more than a couple of decades now. And there are no well-established, traditional democratic institutions for a democratic government to occupy. They have utterly, for the most part, right, transformed the parliament, transformed the Supreme Court, transformed the judicial system in every respect. Obviously, they're in control of the military, they're in control of the police. It's not like you can just drop a democratically elected leader and government into place and expect that Venezuela's function properly, right, Hans?
It's more than that. The U.S. has made multiple mistakes in trying to sweep the bad guys aside and put in the good guys. And that's usually...
You mean just historically in Latin America?
Iraq. Yes. Iraq is probably the best example. You sweep out the Ba'athist, and then the country doesn't function. To Eric's point, if you've had Chavismo running the country for the last 2-3 decades, that's how the system works. You can't just sweep it away and impose people. A lot of the Maria Corina Machado camp have been outside of Venezuela for decades as well.
Doesn't that also speak against this idea that the administration is going to come in and all of a sudden have Venezuela produce more oil, that you're going to have investors willing to come into the country too, if you're talking about this kind of power vacuum and messiness of the current situation?
I mean, why is Delcy Rodriguez in that position? She increased oil production under the U.S. sanctions policy. That was probably the most brutal sanctions that they've imposed on any other country besides maybe Iran.
North
and
Korea.
she increased oil production the entire time. So if you want somebody who can operate in reasonably okay conditions, get the person who operated in the worst conditions. This woman is good. She is she's been functioning in this environment. I mean, I'd take it one step further in terms of the business community that you want to really take off and start cooperating with American companies. It's the, kids of the wealthy families who've always traditionally been in control of Venezuela who stayed there and operated the companies. All the people who've been outside for too long, if they parachute in and expect it to be the way it was in 1998, it doesn't work that way anymore. So focus it on the people who were able to operate companies in this environment, as in the same way you have somebody operating the economy in this environment.
Eric, you mentioned North Korea, obviously not a huge oil producer, but it makes me think of China. What do you make of this narrative that this kind of pro-sec, Academy Securities narrative that this is a move by the U.S. to lock out competitors in China, for example, from the world's largest oil reserves and a massive, gold reserve, et cetera. How active was China in the Venezuelan economy?
Well, first of all, China was active in the Venezuelan economy. Just by way of example, when I flew to Caracas in 2021 and was cooling my heels at the airport waiting to be taken downtown to get an entry visa, there were 3 clocks on the wall in the waiting room. One was Caracas, one was Moscow, one was Beijing. Right? That tells you everything you need to know about the influences in Venezuela at the time. And in that interview that I had with Maduro, he boasted about Venezuela's strong ties with Russia, with China, with Iran. He mentioned India even. So those are motives, for sure. What are Donald Trump and Marco Rubio's main motives? It's hard to tell. It feels to me, on the basis of what I know, that what you described, the sort of effort to box out China, is a secondary motive. Certainly to keep China from wielding influence in the Western Hemisphere, that's a little higher on the list than denying China access to Venezuelan oil. They're all on the list somewhere. What was number 1 on the list? Hard to say.
But
was
not
it giving
drugs,
U.S. companies...
right? Not cocaine, because clearly we just pardoned Juan Orlando Hernandez, who was arguably much more directly tied to the importation of far more cocaine to these U.S.
There
shores.
is a fact set out there.
Yeah.
We can all draw our own conclusions. They don't lead us all to the exact same place.
It's pretty telling that the last state visit that Maduro had was the day before the morning, of the 3rd, with the Chinese. In fact, the Chinese delegation was still in Caracas when we started flying our choppers in. And I got some info on the scramble among the Chinese to figure out how to get their guys out, how to manage in that environment. But it goes back to your original point. The Doctrine, there's always been a view internally that the North-South economic relationship would free us to not be as encumbered on dealing with things as in the Middle East and other parts of the world. So the question is, do you do it America's Act like Senator Cassidy's proposal, or do you do it a little bit more at the point of a gun, like it seems like we're doing? But regardless, boxing out our foreign adversaries or competitors, this is a strong statement. It's a gamble. If it works, you reorder the entire energy configuration of the world. Fortune favors the bold.
Terms of diplomacy.
Yeah, fortune favors the bold. They take a big chance, and if this doesn't work, it's not going to project a well thought out strategy. But up till now, I have to say, I doubted a lot of the strategy that I was hearing coming out of D.C. A few key people laid out what they thought they were going to do, and I didn't think they could do it. So far, they have.
I mean, you think getting out of your holiday in the Caribbean, your vacation, is difficult. Imagine being the Chinese delegation trying to get out of Caracas. Hans, just to leave it, going back to this point of facing China, because Peter Tchir was with us basically saying that what this is a repeat of the Cold War, where the U.S. is fighting Russia, but on different economic fronts and via proxies. Is that what we're seeing in just about a minute here?
Yeah, I think that's fair. But to Eric's point, there's a lot of levels to this. There's internal U.S. politics. There's the midterm. There are domestic issues that perhaps, Trump would like to distract us from. But yes, there is an obsession with the China threat. And this is a dramatic way of putting things into perspective. I'm less and less concerned that this is an opening the door for China to go into Taiwan, and more looking at it like we have demonstrated that our military capacity exceeds theirs.
All right. It's been great to have you here, Hans and Eric. Always a pleasure to see you as well. Hans Humes of Greylock Capital and Eric Schatzker, Editorial Director of Bloomberg New Economy. Coming up tomorrow, Seema Shah of Principal Asset Management. Nancy Tangler joins us as well.